Hello, YouTube. In this video, we're going to try to answer how many times is the Federal Reserve going to raise interest rates this year. It is no longer a question of if or when, it is a matter of how many times. So let's jump straight in and see what has the potential to move the market this week. We're going to be talking quite a bit about Jerome Powell, who is this sexy man you can see right here. Again, like we said, we're talking about how many times are they going to raise rates, not if or when, but how many times. And as we look through here, JP Morgan on February 19th said that they now expect a string of 9 straight Fed rate hikes. That is a lot, citing the risk of the feedback loop keeping inflation high. We can look forward here and also see that they are joining other Wall Street banks in ramping up bets for faster policy tightening after U.S. consumer prices posted the biggest jump since 1982 in January. Goldman Sachs Group Inc. forecasted 7 hikes this year, up from its earlier prediction of 5. We're talking about 5, 7, 9 hikes. This is a lot. And it really matters because on Friday, February 25th, we're going to be getting the Federal Monetary Policy Report and how it is going to potentially impact the stock market. So as we look forward to here, the reason why this specific report matters is because it is done semi-annually, and it is, again, it's written in report to Congress containing discussions of the conduct of monetary policy and economic developments and prospects for the future. And again, this is also going to be presented to the House Committee of Financial Services, along with testimony from the Federal Reserve Board Chair, that is Jerome Powell. So as we think about this, we now have a key date as well. Again, this is from Walter Bloomberg, where it tells us that Fed Chair Powell to give semi-annual monetary policy update to the House Financial Services Committee on March 2nd at 10 a.m. So now we've got a few key dates, and this really matters because we only have so many days left before the March 15th, 16th FOMC meeting. And it's important to note here that there is an asterisk marked beside here, the March 15th, 16th meeting. So that means that this meeting is associated with a summary of economic projections. So why does this matter? Well, it really matters because Jerome Powell did not really speak this week, but almost every other person on the Fed came out, provided commentary, insights, and now we have to hear from Jerome. So I personally believe that we now heard the rhetoric from almost everyone on the Fed, including the Hawks and the Doves, and now what Jerome Powell has to say is going to really matter. And what I think we're going to try to do here is to strike a balance between making sure that we are not too hawkish, too dovish, but that we have optionality. So we now have a few key dates. And again, those are summarized a little bit later in the video. So don't worry if you're not sure about the dates. We will summarize those for you on the slide like we normally do. But what I would note is that Jerome Powell is under a lot of pressure right now. So as we think about what he's going to have to do, he's walking on a high wire. So he's basically trying to make sure that he balances everything and does not have the market melt down. Last week, we talked about Mohamed El-Erian, and we have an update from him this week. So again, he is talking about how investor concerns split between Fed and geopolitics. And we got a few key highlights here from him. And again, this is regarding the rates hike. How many rate hikes? So he said that, I don't buy the 7 hikes for this year. I think that would be excessive. Whoa, that's really big. I think 7 would be excessive. He's saying that Goldman Sachs and JP Morgan are too hawkish. So that is very interesting. As we look at the next statement here, it tells us that they better get out with their guidance. Otherwise, they're really going to lose control of the policy narrative. So again, with Jerome Powell now slated to talk, he's had the feedback loop from what happens when Bullard talks, what happens when Brainard talks, and what message do I want to send? As we look forward to here, this is a follow-up from last week. Notable that he's talking about policy narrative. So I want to focus on number 2. Again, regain control of the policy narrative. So what is he talking about? He's talking about how we need to start getting projections from the Fed. And when Jerome speaks at that semi-annual meeting on March 2nd, that is going to be a huge, huge, huge clue to what we're going to be getting on March 15th, 16th, which is widely expected to be the first time we're going to see the Federal Reserve actually lift off and raise rates. We have a few things here to talk about as well. And here we're talking about 50 basis points or a 0.5% hike in March. So Morgan Stanley's Hornback tells us that the markets are prepared for 50. If they deliver less than what the market is hinting at in their price, then that will amount to an easing of monetary policy. And this is not the environment to be easing monetary policy. Clearly, Mohamed provided his insight. I would agree. If the market is pricing in 50, they better give 50. If they give less than 50, it means that they are now going to potentially have, again, this is from JP Morgan's, right? Michael from Michael's. Here we're talking about the consequences of not doing 50 are a steepening of the yield curve. Any idea that you can invest in risk on through credit or equities, that goes out the window because the Fed will lose, the market will lose confidence in the Fed. So what does this mean? It means that if the Federal Reserve does not actually raise by 50 basis points and the market is baking it in, what the Fed is basically telling you is that we are either unable to cope with this level of increase, or they're scared they're going to break the system. Neither one of those is going to provide confidence to the Fed because it means they're basically behind the curve. We're going to look at one more billionaire here. Again, Carl Icahn had an HBO special that came out this last weekend, and he was on Bloomberg TV with Eric Schatzker talking about a few different things, broad-based conversation. But here we can read that again. He is not predicting we're in a bear market. That's very interesting. Here regarding where he thinks we are at in the market cycle, I am not predicting a near-term bear market. Very interesting because this man is smart. Carl Icahn is also 86 years old, so he's lived through a few more market cycles than I have, and probably you have. Again, a follow-up here to the market cycle, he's telling us that I think the Fed has done a pretty good job over the last few years to sort of save the economy. That's exactly what Jerome Powell was trying to do. Balance inflation, balance price stability, balance job growth, and balance the economy. It's very tough. Following up here from Carl Icahn again, he's telling us that sooner or later, a situation like this is going to end relatively badly. What does that mean? That nasty hangover I keep talking about from all this credit that we've been getting, all this liquidity. So again, as a last comment here from Carl Icahn, over the next 3 to 4 years, maybe a lot sooner, you're going to see this whole thing hit the wall, and it's not going to be a pretty outcome. What is he saying? When the shit hits the fan, you better make sure you're not in the room. That's the takeaway that I got from here. He is old enough to have lived through a lot of market cycles, and I am looking at what he is saying. Moving forward, so now we know that Jerome is in a very tough predicament. He needs to do something. It's a matter of how much, by when, and what is going to be the market's response to that. So by having someone go out early on, like a James Bullard, and provide these hawkish commentaries where the market did tank. It dropped by 2% when he initially teased this comment out. Again, here he's talking about a supersized hike. Like, what are you, at McDonald's, buddy? What are you doing? I'd like to see 100 basis points in the bag by July 1st. I was already more hawkish, but I pulled up dramatically what I think the committee should do. So when he put this out there on last Thursday, the market tanked 2%. Spoken again on Monday, and then I believe again on Wednesday. The market did not do anything. So what does that mean? I think we're at peak hawkishness for the Fed. When Mohamed El-Erian is saying that I think that 7 is excessive and the banks are pricing in 7 to 9, I think there is potential to dial back some of that rhetoric. Moving forward again, Fed's Bullard backs a supersized hike, sees full point by July 1, as we talked about. But the more important part here is the bottom line that I've highlighted. St. Louis Fed chief defers to Powell on size of March increase. What does that mean? What Jerome says on March 2nd is going to really, really matter. And we're going to get clues of that when the monetary policy report is released on Friday. That is the biggest potentially market-moving event for the week. Moving forward here, again, we heard from almost all the Fed heads except for Jerome. So now he knows that what is a market like? What is a market not like? Where is the balance that I want to find between being hawkish and dovish? Brainard says it's appropriate to start a series of rate hikes in March. Sees balance sheet runoff commencing in the next few meetings. Fed governor says markets align with policy outlook. So what it means here is that they are aligned, and the troika is John Williams, it is Lael Brainard, and Jerome Powell, and they all pretty much striked the same pause this week. But hold the door, right? Hold the door. Jerome Powell now has the potential to actually dial back some of that rhetoric. Why? Everyone has been saying that the back half of 2022 is going to see inflation moderate. So if we do ultimately get to that 100 basis points by July and inflation actually does start moderating, that is where I think Mohamed El-Erian's comment regarding 7 rate hikes being excessive could actually be dialed back and could provide some relief to the markets and to broader risk assets. So again, maybe we're not going to get exactly 7 to 9, and Jerome is going to guide us. Let's hear what he has to say. So here are the key events that could potentially move the market this week. Again, we can see there's a few here for February. Nothing all really that big. Olympics end on Sunday. On Friday, we got PCE, which is the Fed's favorite inflation gauge. And then we got that Fed monetary policy report, which is tentatively scheduled to release on Friday. Looking forward to March, these are the dates that I talked about before. Wednesday, the 2nd, we're going to have Jerome Powell giving testimony. On the 8th, we're going to be having a blackout period. The Fed can normally not speak roughly 1 week before their meeting. And on Tuesday 15th and Wednesday 16th, we're going to have the 2-day FOMC meeting. And on the Wednesdays, when we have the press conference, the Q&A, and the interest rates decision. On Friday, we have monthly OPEX. So it is going to be very interesting where we land between now and March 18th. Looking forward to earnings, there's not really all that much going on. There's a couple companies like Home Depot, like Lowe's, but for the most part, the market has pretty much already gotten its feedback in terms of the trends and what we should be focusing on for this next quarter. Looking forward to the news, there's not really all that much. We got 2 things to look at here that we've not already talked about. Ethereum founder Bullard says, crypto welcomes another winter. Oh, yikes. Cooling prices seen, helping more sustainable projects. There we go. So I don't know what that means, but this is published at 7 a.m. on February 19th, the day that I'm recording this. NATO's chief says Russia could invade Ukraine without any warning at all, as Putin tests, again, some launches. So why does this matter? It matters because of the way the market normally reacts to how we have war. So we can see we got Vietnam, we got the Gulf, Afghanistan, Iraq, and Crimean. Every time you want to buy the dip. So when they actually go in, what do you want to do? You want to buy the dip. And as I talked about before, it appears that we are at peak hawkishness. So if we're going to be getting that invasion happening, which Joe Biden said is imminent, and it's a matter of how many hikes, and now Jerome Powell has a chance to smooth out the narrative, I think that there is potential for us to be at peak hawkishness and peak bearishness. Thank you for watching, and I very much look forward to seeing you in the next video, which should queue up here shortly for the stock market charts for this next week. Thank you for watching. I would appreciate a thumbs up. Drop me a comment, and I will see you on the next video. Thank you.